Well, I was wrong. Last night in the video, you guys saw me give my reasons why I thought Amazon would fall after earnings, and I even told you guys that I opened a put option on Amazon. And Amazon earnings came out on Thursday, and the stock did not fall. In fact, it did the complete opposite. It rallied. And that's okay. Everybody is going to lose money on trades sometimes. And how you handle a loss is really important. You have to understand there's not a single trader in the world that never takes a loss unless they're just flat out lying. The traders who do take losses, and especially the social media influencers who post their losses, are the ones to be trusted because these are the guys who are showing you the reality of trading in the stock market. The reality is we're all going to take losses sometimes. The question is, are you going to let a loss ruin you and cause you to start gambling and trying to earn back those losses? Or do you move on and just say, you know what? Losing money is a part of trading. I'll get it back on the next one. That is key. Getting in a good mindset, understanding that it's okay to lose money in the stock market. All you have to do is make money on most of your trades. And nobody's goal should be to make money on every trade because that's impossible. You guys saw me make money on Tesla during their earnings. You saw me make money on Google during their earnings. And you saw me lose money on Amazon. And that's okay. 2 out of 3 ain't bad. So let's talk about some of the earnings that came out today. And I want you to stay encouraged if you have some trades that don't go your way. Just keep trying again, keep practicing, keep going after it, and just make sure that you're winning more trades than you're losing. Getting into the earnings that were reported on Thursday, Airbnb reported a continued deceleration in nights and experiences booked. The stock was down about 2.5% on the day. And even though Etsy beat analyst expectations for the second quarter, their third quarter guidance came in quite weak. Etsy shares fell over 13% on the day. And this just goes to show that very often during earnings, it's not actually the quarterly results that matter that much. It's really the forward guidance that matters. You got to remember that stocks are priced based upon how investors expect those earnings to come in over the next 12 months. They're not really priced based upon what's happened in the past most of the time. Now, of course, there are other things that could push stocks up well above fair valuation, such as any sort of hype or speculative rally. And we are seeing a lot more of that lately, with a lot of stocks hitting some pretty insane forward PE ratios. But in the case of most of the stocks that we're going to be reviewing, they're fairly close to fair value, just possibly slightly overbought. Now, DraftKings posted a huge surprise profit, and they increased their full-year sales forecast. DraftKings CFO Jason Park said, "Our unit economics are outstanding, with older states generating more than enough cash to fund investment in new states." That is awesome because it means DraftKings can continue to grow without doing any more share offerings. And now they're profitable. This is news that is as big as when Palantir first became profitable 3 quarters ago. This literally changes everything for DraftKings. And if DraftKings can do what Palantir did and continue to show profits for the next few quarters, this is a stock that could absolutely rally 100% over the next 6 months. DraftKings is a stock that I am very bullish on, given the fact that they are now profitable and their cash flow is positive to where they're able to grow without taking on any more new debt. So bravo to DraftKings. I am super bullish on this stock. DraftKings was up 12% after hours, and for really good reason. Cloudflare also reported earnings on Thursday. Their revenue came in line with expectations at $308 million versus $305 million expected, but their earnings were a huge beat at 10 cents versus 7 cents expected. Free cash flow was also up 43% from their previous quarter, and year over year, revenue grew 32%. Cloudflare stock was up 8% after hours. And Coinbase also reported earnings after the close on Thursday. Coinbase's revenue beat estimates, and executives said they expect to win the battle with the SEC. Coinbase reported revenue of $707.9 million in the second quarter, beating estimates of $663 million. But like I just mentioned, it's really going to be the forward guidance that drives the future price of stocks. And the crypto exchange expects third quarter subscription and services revenue of at least $300 million. That was well short of estimates of $336 million. It's also very interesting to note how they had revenue of $707 million in the second quarter, but only expect $300 million in the third quarter. What really helped Coinbase this past quarter was that their interest income in the quarter surged to $201 million from just $32 million a year ago. This is a company that is taking full advantage of rising interest rates to significantly increase their revenue. And while Coinbase's investments have been very successful, unfortunately, their actual business is continuing to go down. Trading volumes in the second quarter dropped to $92 billion from $217 billion a year ago. Although, thanks to the increase in their interest income, the loss narrowed to $97 million from $1.09 billion a year ago. Investors were not happy with the forward guidance, and the stock was down about 1% after hours. Wish also reported earnings after the close on Thursday, and their earnings were a complete disaster. Revenues were down 42% year over year, although thanks to a lot of cost cutting, the net loss was only $80 million instead of $90 million from a year prior. So how did Wish see a revenue decrease of 42%, and yet their loss actually decreased as well? Well, this is what we've been talking about this entire earnings season, is how revenues across the board are going down significantly, or at the very least, the growth in revenue has slowed significantly. And this normally would cause earnings to come down significantly as well and cause stock prices to fall. However, CEOs anticipated this significant decrease in revenue as they started to prepare for an upcoming recession that we may or may not be in. And as a result, what a lot of these companies did is they started doing massive cost cutting. And some of the cost cutting that they did included layoffs. And that's exactly what Wish did. Wish actually plans to lay off an additional 225 workers. And by doing all of these layoffs and other cost-cutting measures, such as not investing in new equipment right away, these companies have been able to increase profits even though revenues are going down. Now, investors normally love this, but in the case of Wish, I guess those cost-cutting measures just weren't quite enough. The stock was down about 14% after hours. Now let's get into the two earnings that you really want to know about. And the first one is Amazon. Amazon reported a blowout profit, beating on sales and issuing optimistic guidance. Amazon reported an earnings of 65 cents per share versus only 35 cents expected, nearly double what analysts were expecting, and by far their best quarter this entire year. Revenue came in at $134.4 billion versus $131 billion expected. Their AWS services came in at $22 billion versus $21.8 billion expected. And advertising was a beat as well at $10.7 billion versus $10.4 billion expected. Now, one thing you'll notice is something that we've talked about, and just same with every other company. The revenue barely increased at all. It was only up by about 10%. But the earnings was an increase of almost double. So how was Amazon able to double their earnings while barely increasing their revenue? Well, as is the case with almost all of these companies we've been talking about, the blowout profit indicates that CEO Andy Jassy's ongoing cost-cutting efforts are beginning to bear fruit. Amazon initiated the largest layoffs in its history, cutting 27,000 jobs since last fall. So Amazon, like a lot of these stocks, is not really increasing revenues, but they are able to post some incredible profits and earnings because they're cutting costs so much. For the third quarter, Amazon expects sales growth of between 9% and 13%, which is better than analysts were expecting, but still down significantly from where they were about 3 years ago. Sales at AWS climbed 12% in the second quarter. Still, that marks a deceleration from the prior quarter when sales expanded 16%, and it's the slowest growth since 2015. Amazon's AWS services are a huge part of their revenue. AWS accounted for 70% of Amazon's $7.7 billion in operating profit. Now, while growth remains below historical standards for most of the large cap tech group, results are starting to rebound after a tough 2022, and cost-cutting measures across the board are bolstering profitability. On a side note, advertising continues to be a booming business for Amazon as well, with quarterly revenue jumping 22%, far outpacing Google's ad revenue rise of 3% and Facebook's ad revenue rise of 12%. After that huge earnings beat, Amazon stock was up 8.7% after hours. Now, yes, Amazon stock still remains extremely overvalued with a PE ratio of 100, but thanks to the blowout quarter that they just had, the valuation has improved significantly. Going into earnings, the PE ratio was over 300. Now moving on to Apple. Apple beat expectations driven by an 8% services growth. Service sales grew 8% on an annual basis, but overall sales still fell 1% year over year, as revenue in the company's iPhone, Mac, and iPad lines were all down from a year earlier. Amazon went into earnings with analysts expecting a horrible quarter, and Apple was able to slightly beat those horrible expectations. Earnings per share came in at $1.26 versus $1.19 expected. Revenue came in at $81.8 billion versus $81.69 billion expected. And revenue overall was down 1%, iPhone revenue down 2%, Mac revenue down 7%, iPad revenue down 20%. However, services revenue was up 8% and other product revenue was up 2%. So Apple continues to struggle selling their products. However, thanks to their services, such as their App Store, Apple was able to increase the revenues above analyst expectations, even though the quarter overall is the third quarter in a row that Apple has reported that was not good. Now, of course, what investors are ultimately looking at is not the past, but the future. And Apple does not provide forward guidance, but they do give a lot of indication on their earnings call about where they expect the future quarters to go. Unfortunately, Apple said they see September revenue coming in lighter than expectations. Apple sales have been declining steadily for the past 3 years. And unfortunately, for the past 3 quarters, revenue has been negative year over year. And if you're asking how Apple stock is near an all-time high with a revenue decline like this, I honestly have no idea. On the plus side, Apple CFO says Q4 should be a little bit better after another drop in Q3. While this is the third quarter in a row where Apple has reported really horrible earnings, this is the first time that the CFO and Tim Cook have been completely unable to impress investors. Unlike the last 2 quarters where we saw Apple stock rally after horrible earnings, this time it fell. The stock was down about 2% after hours. Now, of course, if you're trying to play earnings and you're trying to buy options on earnings, whether they're calls or puts, you got to understand that any options plays you do on earnings are a complete gamble. It can literally go either way. So just understand that. If you want to play earnings, fine. I like playing earnings. They're a lot of fun, but I definitely keep those position sizes extremely small, understanding that earnings are an absolute gamble. Of course, if you do want to gamble, might I recommend the Mega Millions lottery. The jackpot hit $1.25 billion. Believe it or not, it actually makes mathematical sense to play the lottery right now. Heck, I bought a ticket. Now, looking forward to Friday, keep your eye on the Friday, July jobs report that will be reported at 8:30 a.m. Eastern Time, or about 1 hour before the market opens. Wall Street analysts expect that non-farm payrolls have increased 200,000 in July, which would be the smallest gain since December of 2020, while unemployment is projected to hold steady at 3.6%. Now, after the ADP private payrolls came out much higher than analysts were expecting on Wednesday, I would not be surprised to see a huge beat on the jobs report on Friday. And generally, when the jobs report comes in stronger than expected, this usually causes stocks to rally because it shows that the economy is strong, and it gives equity investors hope that the Fed might end up no longer raising interest rates, even though they say that they're going to continue to. Friday's payrolls numbers are a key arbiter to whether the economy is headed for a downturn and if the Federal Reserve needs to keep raising interest rates to control inflation that is still running well above the central bank's desired target. So that's what's going on in the market. Don't forget, I have a free training taking place on Saturday. That free training is going to be held on YouTube, and the free training is going to take place at 3 p.m. Eastern Time, or noon Pacific Time. 3 p.m. Eastern Time, Saturday on YouTube is a free training where I will be teaching you how to do multi-leg options, specifically focusing on credit put spreads and credit call spreads. These types of options can significantly lower your risk when trading options and also significantly increase the chances that you make money, since with these credit spreads, you can literally make money whether the stock goes up or down. So that training will take place Saturday at 3 p.m. Eastern Time. Come join us right here on YouTube for that free training. We'll be going live right at 3 p.m. Eastern Time. If you got a lot out of this video, then be a good friend. Share this video on your social media pages so that others will know what's going on in the market as well. Don't forget to hit the like button and subscribe. And if you missed yesterday's video where I covered some of the earnings that came out on Wednesday, make sure you watch the last video that I uploaded here.